Industry leaders are gathered in Washington, D.C. for Green Street Advisors Lodging Conference. Joining me today at the Park Hyatt Hotel is a true industry veteran, Laurence, President and CEO of Strategic Hotels and Resorts. Laurence, with more than 4 decades in the lodging industry, what's been the biggest change that you've seen?
I think the biggest change really has become the professionalism of the industry and the metamorphosis from a series of cottage industries, very disparate, parochial type cottage industries, into a really global business run in a professional manner.
And what impact have lodging REITs played on that growth of professionalism?
The growth of professional ownership in the form of lodging REITs, and they're mainly in the public hands, which can afford the scale of services that owners need and the skills, whereas previously it was an individual owner for a group of tax people, a doctor or a dentist or an institution. Now they're in hands where the chains have a consistent partner to work with, so they can link together for not only professionalism, but for future growth. They can plan better.
Lodging is one area where observers are expecting to see a large number of acquisitions for companies that have access to capital. Do you expect to see acquisitions starting pretty soon?
Oh, sure. Acquisitions will come, but they won't divide that in. Everybody has been looking at distress and bargain hunting. Perhaps there is in some levels of the market the more limited service than perhaps has been some, but I don't see it in the large assets because the lenders are more sophisticated. Everybody is more sophisticated, so I don't think there'll be a deluge of distress. I do think there will be the normal activity. We're at subnormal levels of acquisition activity.
Are acquisitions a priority for strategic hotels?
Because of our leverage situation and the fact that high-end lodging took a hit worse than others, as far as I can see, our focus will be on de-risking, de-leveraging, restructuring the balance sheet.
Your company focuses on the upper upscale and luxury segments of the lodging industry. How are fundamentals in those two areas?
Generally, I think fundamentals in high-end consumption, certainly in North America, are incredibly stronger as compared to last year in every aspect of it.
And how would you say Europe compares to your U.S. operation?
In general, I would say absent Paris, which didn't fall as hard because it was held up by multifaceted tourism. I think Europe, I personally feel Europe is behind the curve, and countries such as Germany and Spain have got supply problems and systemic problems that will keep in lodging anyway the European recovery slower.
Your company prides itself on its asset management business. How has that strategy helped you during the downturn?
We've systemically changed the organizations through industrial engineering processes of these hotels. Previously, we didn't get the full cooperation of the chains with it because they thought this is a temporary blip. We cut ours, we'll put them back as occupancy comes back. Now they've fully subscribed to changing not just at the line level, but at the total organization level. So jobs have been merged and have disappeared. They're not coming back. So as the recovery occurs and as revenues increase, your profit per dollar revenue will be greater than before. So, so I think coming out of this, in a supply-constrained environment, which it is, and it looks like, especially at the high end for certainly half a decade ahead, it looks like the hotels should be increasingly profitable as compared to previous recoveries because of supply and because of systemic changes to organization.
Thanks, Laurence. For REIT.com, I'm Matt Bichard.